For years, they were the name in electric cars, a true symbol of China's tech dominance. But what happens when that engine suddenly starts to sputter? We're about to dive into the story of a champion facing a very sudden, very unexpected slowdown.
So yeah, that's the big question, right? It's on the mind of every investor and analyst out there. Because when a giant like this stumbles, you feel the shockwaves across the entire global auto market.
You see, BYD didn't just lead the pack. In many ways, they were the pack, even topping Tesla in global sales. But the latest data, well, it suggests the road ahead just got really, really bumpy. Let's unpack exactly what's going on.
All right, so where did all this talk begin? Let's get right into the numbers. The first real sign of trouble came from one, let's just say, alarming monthly sales report that sent a chill through the whole industry. This is the number that kicked everything off. Just over 205,000 vehicles. Now, to put that in perspective, this is their worst performance in almost 2 years. After the kind of explosive, non-stop growth they've had, a number like this is a huge flashing red light. And, the market noticed immediately. A 6-week slide in their stock price. That tells you this isn't just some small blip on the radar. It's a real sign of some pretty big challenges and growing concerns about where the world's biggest auto market is actually heading.
But here's the thing. BYD isn't operating in a vacuum. To really get what's going on with their slump, you have to look at the whole racetrack they're on. And believe me, that track is getting dangerously crowded.
Now, this is where it gets really interesting. This slide paints a super mixed picture. Yeah, BYD is down, but look at Geely. They're surging into second place. And check out Ito, the company backed by tech giant Huawei, up a wild 80% from last year. So this isn't just a simple slowdown. It's more like a massive reshuffling of the deck, all driven by a brutal price war that's forcing everyone to offer more for less.
And this quote here from Sino Auto Insights, it just hits the nail on the head. BYD's problem isn't just one big rival. It's everyone from all sides, all at once. Competitors are chipping away at their market share, especially in those lower-cost segments where BYD used to be untouchable.
So it's not just about the competition. There are these huge external forces at play, too. The very government policies that basically fueled this EV boom in the first place, well, they're starting to change, and that's creating some serious headwinds for the whole industry.
Let's break these down one by one. First up, after a whole decade of exemptions, the government brought back a 5% purchase tax on these cars. That might not sound huge, but it definitely changes the math for buyers. Second, you've got the Lunar New Year holiday, which always makes the earlier data, let's just say, a little unreliable. And third, that price war we mentioned, it's just a constant, grinding pressure on everyone's profits.
So the key thing to understand here is the psychological effect. When buyers think prices might drop even more, or now they have to pay a new tax, they wait. They just hit pause. And when the car makers see that hesitation, they get nervous about launching new models. It creates this whole cycle of caution that just slows everything down. Okay, now we need to zoom out even further. Because the trouble in the EV market, well, it could be a warning light for something much, much bigger. The health of China's entire economy. See, for the last few years, as China's massive real estate sector has been in a serious slump, the EV industry was the one real bright spot. It was the big success story. A slowdown here is extra worrying because it was one of the few things really propping up economic confidence. And the stakes here are just enormous. We're talking about 30 million jobs in China's auto sector. That is more than 1/10 of all urban employment. When this industry feels a chill, a huge number of people feel it too.
But, and this is really important context from Fitch Ratings, while the auto sector is vital for jobs, look at this chart. In terms of investment for future growth, it's still dwarfed by real estate. See that? Autos are just 3.7% of fixed asset investment, compared to 23% for property. This tells us that, yeah, the EV slump is a problem, but that real estate crisis is still the much, much bigger economic headache for Beijing.
Okay. So with all these challenges in mind, the competition, the policy changes, the economic worries, what's the road ahead? How is BYD, the king of this market, planning to navigate this incredibly difficult period?
And this is pretty fascinating. Look at their strategy. Domestically, they've gone totally quiet. No full-year sales target has been released. But internationally, they're flooring it. They're aiming for a nearly 25% boost in overseas sales. This looks like a very clear pivot. If the home front is tough, you go out and win the war abroad.
But hey, don't count them out just yet. Despite all these headwinds, analysts are quick to point to BYD's deep investments in the whole ecosystem. We're talking charging, batteries, smart driving tech. The general feeling is that while the short term is going to be painful, these long-term plays will likely ensure they remain the dominant force in the market.
So that leaves us with the ultimate question. Is this just a temporary stall, a champion catching its breath during a tough lap? Or are we seeing the beginning of a systemic overheating in a sector that has been running red hot for years? The answer is going to define the future of the entire global auto industry.